very warm welcome back from the weekend, everyone. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I'm Grace Akbarago. It's Monday, November 17th. We thank you for joining us at this time.
All right, let's tee off with your news now. Monday, EIB Global and Zambia Industrial Commercial Bank have signed a financing agreement to mobilize 30 million euros to support agricultural value chains and private sector growth in Zambia. The facility, announced during the EU-Zambia Lobito Corridor Business Forum in the presence of President Hakainde Hichilema and EU Commissioner Joseph Sikela, seeks to strengthen agri-food SMEs and smallholder linkages. EIB Global will provide 15 million euros matched by ZICB to expand access to finance for businesses relying on smallholder producers, enabling farmers to access markets, boost production, and invest in improved practices. In South Africa, Electricity Minister Dr. Kosientsho Ramakgopa briefed the media on Sunday on the latest development of its nuclear energy program. The minister outlines key progress areas and new details surrounding the country's nuclear plans following weeks of heightened public interest and policy debate. Here are excerpts.
That we reactivate key facilities. Like I said, we went to the fuel development laboratory for nuclear fuel qualification. So we're placing ourselves now as big players in the world on the nuclear side. So as we explore and proceed to build our own program, we think that we can play a big role on the fuel side. And then they're also going to reactivate the helium test facility for systems testing and reactor readiness. Again, we are placing ourselves as one of the key players on the research side in relation to the nuclear fuel cycle. What NEPSA will do is that we are not going to rely on the fiscus. The fiscus is constrained. We're still having significant pressures on the fiscal side, so it's not our intention to tamper with the fiscal envelope. But like I said, the demand and the suitors to partner with us is insatiable, and we are going to seek those partners. These conversations would not be possible if we have not lifted the care and maintenance, and now South Africa is going back to its rightful place as a major player on the nuclear fuel cycle. And we are confident that over a period of time, will be a dominant and indispensable player on the nuclear side. And of course, what the NEXA will do what we call vendor identification, the players that are already playing in this space. We have lost time because over that period when we close place care and maintenance on the PBMR, it meant that we have lost significant amount of time. We have lost about 16 years of development. So we've got every ambition of catching up. Catching up means that partnering with those who remain in the space and ensure that the benefits are symbiotic, they are mutually reinforcing.
South Africa has secured its first credit rating upgrade in almost 20 years after S&P Global raised the country's foreign currency long-term rating to BB from BB-, citing stronger growth prospects and improving fiscal outlook and lower contingent liabilities following better performance at Eskom. S&P expects GDP growth to rise to 1.1% in 2025 from 0.5% in 2024, supported by reforms in electricity and logistics, with average growth of 1.5% projected through 2026 to 2028. The rating agency also noted stronger revenue collection, a narrowing budget deficit, and anticipated primary surpluses. South Africa's outlook remains positive. In Nigeria, S&P Global Ratings has revised Nigeria's outlook to positive from stable, while affirming its B- over B long and short-term foreign and local currency sovereign credit ratings. The agency also confirmed Nigeria's national scale ratings at NGBBB plus over NGA -2. The positive outlook reflects improving external, economic, physical, and monetary indicators. S&P notes that despite low GDP per capita, a weak but improving revenue base, high debt service burdens, and data collection challenges, Nigeria's authorities are implementing measures to strengthen growth prospects and macroeconomic resilience. In Egypt, the Financial Regulatory Authority, chaired by Mohamed Farid, has revoked the microfinance licenses of 258 NGOs classified under Category C under Decision Number 258 of 2025. The move follows monitoring and inspections that found persistent non-compliance with microfinance regulations set out in Law 141/2014 and its amendment by Law 201/2020. The FRA said the decision aims to strengthen the non-banking financial sector, protect client rights, and ensure a more efficient market that supports vulnerable groups. In other news, rethinking debt sustainability is the focus today as African leaders and global partners gather to examine new financing models for the continent. The event builds on the Compromiso de Sevilla and growing calls to redefine debt sustainability. With traditional borrowing models no longer fit for purpose, participants are pushing for a new framework that restores fiscal space, improves debt governance, and supports transformative long-term investment. Here are excerpts.
So let me begin with a stark reality that is affecting more than half of Africa's population. So across our continent, governments are now spending more on interest payments for the loans that they have taken than they are spending for social services such as health, education, and social protection. And this is not just a debt crisis, it's also now a choice crisis. And the choice is between really made repeatedly in interest over infrastructure, creditors over classrooms, the past over the future. And this alone, I think, when we think about this year, we're talking about Africa paying nearly $89 billion in external debt servicing. And that is $89 billion that will not build enough hospitals, schools, expand digital connectivity, including Africa's need for compute power to achieve AI sovereignty. It's $89 billion less for supporting our young entrepreneurs who are proving every day that they have the answers to the challenges that we see in the development field through their innovation and talent. And here is the uncomfortable truth, ladies and gentlemen. High-emitting countries owe Africa at least $36 trillion in climate debt. And that's not being paid. There's no servicing of that debt. This is over 50. So let me...
Finally, on news now, Astoria Investment has announced plans to delist all its shares from the alternative exchange of the JSE and the Stock Exchange of Mauritius. The company proposes a cash offer of 214.97 million rand to buy back shares alongside a distribution of 7,447,473 Gold Rush Holdings preference shares, providing shareholders with continuing economic exposure. The move is designed to address low liquidity, narrow the discount to net asset value, and reduce listing costs while delivering value to shareholders. I am Melissa Enoch, and that's it on News Now this Monday. The show returns shortly with Grace at the FMDQ Archives Room, giving us our markets round. Stick around. Welcome back to Money Moves. Let's now go over to Grace for today's markets review. Hello there, Grace.
Hi, Melissa. Let's now track how the markets open trading for the week. Starting off with the equities. The Nigerian Stock Exchange slipped 1.26%, while the BRVM gained 0.65% to 339.16. The Nairobi Securities Exchange edged up 0.23% to 187.86. In South Africa, the Johannesburg Stock Exchange was almost flat, and in North Africa, the EGX 30 closed on the negative, down 0.35%. Let's do a quick round on some of the Pan-African currencies. The Rand traded 17.07, up 0.08%, while the Egyptian pound weakened 0.35% to 47.03. The CFA franc eased 0.11%. Kenyan shilling firmed 0.08% to 129.40. And the Moroccan dirham appreciated 0.15%. The naira weakened further, trading at 1,447 naira 35 kobo, down 0.54%. Let's switch into the commodities data deck, beginning with energy prices. Energy commodities traded slightly lower. Brent crude slipped 0.19% to $64.27, while US WTI was down 0.22% at $59.95. Natural gas saw a sharper decline, falling 2.45% to $4.45. Arabian gasoline dipped 0.84% to $1.99 as at 12:38 GMT. Now, finally, two metals prices. Gold traded at $4,080.20, down 0.34%. Copper declined 0.58% to $5.03. And platinum shed 0.51%. Aluminium dropped 1.95% to $2,840.05. Iron ore was steady at $103.95, down 0.10%. As at 12:39 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those market updates. And that's it on this Monday's edition of Money Moves. From me and the rest of the team here at the FMDQ studios, we say thank you very much for watching and bye for now.